Hey guys, welcome back. Today we're going to be talking about the relative strength index indicator, is what I like to call a oldie but goodie. It's a great indicator for looking at trends and finding U-turns in the market. But before we get too in depth into that, what I want to do is throw out some disclaimers here. And I just want to just put it out there that these videos are for educational purposes only, right? Educational purposes only. I'm not your investment advisor, so I'm not trying to give you investment advice. If you are seeking investment advice, then you need to speak with a licensed, competent professional to help you with that. Okay? Do not try to get investment advice from the conversations that I'm having here on these videos. These are educational videos only. Okay? So now we got that out of the way. Let's get back into the good stuff here with this indicator. So the way this indicator works, it essentially lets you know is price strengthening or is it weakening in the direction that it's going, right? And that's good to know. And the way it does that is let you know it has these two lines, right? And this line here, which is the overbought line. And the overbought just means that all the buyers that pretty much are going to be buying this currency pair pretty much have already purchased it when the currency pair hits this line. So you can pretty much expect to start seeing the price to start dropping after that, sometime after that. And then the bottom line here is the oversold line. And essentially what that means is that if the price crosses that line or touches that line, it's pretty much telling you that, hey, you know what? All the folks that are looking to sell this product has pretty much already sold it. And so prices are relatively cheap. And what you should be doing is kind of looking for some U-turns in the market where the price is going to, where buyers are going to start coming back in and pushing this price back up. Now, does this work 100% of the time? Absolutely not. It does not. You will get some false overbought, oversold signals. It has been. I have seen instances where this signal line has just stayed forward down, below 20 even for a long period of time before it came back up. And that's why this indicator, just like every other indicator that you use, you really need to use some type of confirmation tool along with it to kind of help you get a better idea as far as when to enter in and when to exit out. And then of course you need to use good money management rules whenever you're trading, so that way you're not trading, you're not over leveraging yourself and trading too much on one trade. Okay, but let's just kind of take some quick look. Let's take a quick look at some of these examples here, and just to kind of give you an idea of how this tool is used, and and you can kind of tweak it and play around with it and decide how you're going to use it for yourself. But if you look right here, price has been coming down for a while. And then if we look at the RSI, we'll see that it hit below 30, right in here, right? And not immediately, but a day or two after it hit below 30, once again, all the sellers have then, pretty much sold with their position. We start noticing that price starts going back up again, and it goes up. And it pulls back a little bit, but that's okay because we know that it hasn't hit 70 yet, so we shouldn't be too alarmed, right? But we know that we still got some more movement in this price, and yes, we did. And if you notice over here, price did hit 70 and it actually stayed above 70. 2, 3, 4. So we say it stayed up and around about 70 for about 3 or 4 days, right? So that kind of goes back to what I was telling you earlier about how just because it touches or if it goes through one of those overbought or oversold lines, that not necessarily means that you need to get out of it right away or buy right away. It just tells you that that's the zone. This is where it's at, and you need to be very careful. Perhaps get another indicator to come in there and confirm what you're seeing, and then that way you can make a decision from there, right? And one of the things I like to do, if you've been following me, is we like to look at price action, and you can kind of see the price has been pushing up, and then you're starting to get some kickback from the bears, where it's starting to all of a sudden, you're seeing some red up in here, you're seeing a lower buying, and here you're seeing some pushback on buying, and you're still seeing more sellers come into the market, and then as the RSI starts to break below 70, then you start seeing your price break from the highs as well. And then this whole down up here, it's just it looks like a little bit of congestion. It's kind of some consolidation that's going on, right? Now, if you wasn't using this indicator and you're just looking at this just with your regular eyes, you probably will say, wow, you know what, it's still potentially some more buying opportunity here, because the price is just moving sideways, and it may break out, and make a new high, and since it's already moving up over here, this right here could just be a consolidation, the market taking a breather before it continues its original move and keep going up. And just looking at it with the naked eye, that's not a bad assumption to make. And this is where this indicator really kind of helps pays off here, because if you notice this indicator here, it is still making moves to the downside. So this here was the high where it went above 70, then it came back down again, right? Another high here, or here rather, all right? It's a lower high. It went up just a little bit above this high here, but we can still say it's a low high, all right? But we look at the price. The price is not really moving in conjunction with what this indicator is telling us, right? So if I'm looking at this indicator here, and I'm looking at it, I'm seeing like, hey, this was the high over here. Here goes a lower high. Here goes a lower high. It's definitely a lower high, over here. But I'm looking at price, and price is still keep hitting up and a little bit above this resistance zone over here, right? This indicator is giving me an early warning. It's what we call a divergence, folks. This indicator is moving in the opposite direction of what you see the price action, right? That's letting you know that these moves that you see that are taking price, from here up to here, it's taking price higher, that these moves are really kind of baseless moves, right? These are, these are folks who don't really know how to trading and pushing this up higher. These moves right here are not the moves that this is not where you want to be at. You don't want to be on the buy-in end here. It looks good, and yeah, you might have made some money, but man, that's a lot of risk to take, right? You'd be better off looking for a position to sell. So when you start seeing this divergence here in the market, one of the things I like to do is just come in and just start selling, right? If we know this is the resistance zone up here, right? Then anytime price comes up and touch that resistance zone, I'm going to be looking to sell the market, right? Because I'm looking at my RSI, and it's telling me that buyers are steadily getting out of this position, even though the price is going up. Something's going on behind the scenes that I don't know about, and this indicator right here is like my early warning system, and it's telling me, hey, you need to be on the lookout. The price is going to drop, and you don't need to be a buyer right now. You need to be a seller, right? And so that's what I'm going to be looking for, my selling opportunities. And sure enough, just following this little simple technique right here, right? The market finally breaks, yeah, and it's an opportunity for you to make a lot of money in the market, right? And then as you can see here, when the market broke and it came down, it's crushing it. It's coming right down to the 30 mark, right? And you could definitely get back in, but if you did, you would have lost money. And that kind of goes back into what we were talking about earlier about identifying the trend and making sure that you're on the right side of the trend before you trade. And even though this indicator right here helps us find areas to get in and out of the market, we want to make sure that we're using it going in the direction of the market, right? So if we know, like here, right, if we know that the market is going up, the last thing we want to do, is put on a, if we know the market's going up, we don't want to be trying to sell here, right? We don't want to do that. It's only when we get into a situation over here where we start seeing that, hey, you know what? Even though the market is going up, and we know that it looks like we got some type of support forming over here, right? Even though we know we got all this, and then we know that we got another resistance forming up here, right? Even though we know we got all this, even though we know we got resistance here, support here, right? And so we can easily just without looking at this RSI indicator, just kind of come in here and just say, hey, I'm gonna buy line here, and then I'm gonna sell up here, and I'm gonna buy back when the price goes here, and I'm gonna come back and sell up here, because man, this thing looks like it's gonna continue to go up. When we look at the RSI, when we start to understand about support and resistance and trend lines, we get a better understanding, and we can determine that, hey, you know what? This RSI is moving in the opposite direction of this price. That's telling me something. I need to be selling this thing. And then once price breaks this trend line here, right, and it does it right about here, that's, I know I need to be selling this thing. And then when it breaks support here, I got no choice but to be selling this thing. I mean, that's 3 confirmations right there that you've made the right decision to be selling. So even if you didn't get in here, right, and you're very conservative, and you just say, I just don't want to, I don't want to risk it, maybe a breakout or something, I don't know, I'm still learning. When you get down to here, it's kind of one of those things like, wow, this could be something big. And it was pretty good. So how many pips was that? From that low to here. So that's about 384 pips. Folks, I mean, if you're trading at $10 a pip, $3,840 right there, which you made in the course over a couple of days. So once again, not to go into too much details, I just really want to kind of give you a brief, overview, a brief look at this indicator, just to kind of touch back on what we talked about in the article that I wrote about the indicator. I just want to kind of show it to you in action. If you guys got any questions, please feel free to hit me up. I love to answer any questions that you have. If there's anything here you don't understand, just definitely send me a line, and I'll go back and I'll try to maybe do another video to cover it. Once again, guys, thanks for tuning in. Happy trading, and look forward to hearing from you guys soon. Take care.